you could completely annihilate and cripple the entire retail sector across the country for, let me be generous, $1 billion. $1 billion would clean up every single ounce of gold, every single ounce of silver. There'd be nothing available, and premiums would be 100% over spot, and spot would be meaningless. And that's where we're headed.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for September 25th through October 2nd, 2023, while supplies last. This week we feature two different specials, fractional eagles and British sovereigns. We have 1 10th-ounce gold eagles at $39.99 over melt and 1 1/4-ounce gold eagles at $59.99 over melt. We also have King George British sovereigns at just $49.99 over melt. First, the gold eagle was released in 1986 and has been one of the most popular gold bullion coins in the world, providing incredible recognizability and investor trust. The 1 10th-ounce and 1 1/4-ounce eagles are additionally sought after for their high degree of flexibility and liquidity. Like the 1-ounce eagle, the 1/10 and 1 1/4-ounce eagles are 22-karat gold strengthened with copper. They're 1/10 and 1/4 of a troy ounce respectively, and come in tubes and boxes at quantity. The 1 10th-ounce gold eagle is just $39.99 over melt, and the 1/4-ounce gold eagle is just $59.99 over melt while supplies last. They're also IRA eligible. Next, the King George British Sovereign is one of the best-known historical coins around. The British Sovereign contains 0.2354 troy ounces of gold and was first minted in the 1400s. The King George Sovereigns continue this tradition between the years of 1911 to 1932 and are prized for their fractional weight and their historical merit. They are priced at $49.99 over melt with a minimum purchase of 2 sovereigns. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Bill Holter from billholter.com and also a fellow Miles Franklin broker. Bill, thank you so much for joining us today.
Thanks for having me, Elijah.
Well, it's great to have you. You are one of our favorite guests here on the channel. Our viewers always love hearing your perspectives. So I did want to first discuss kind of what your pulse is for the economy right now, because a lot of people I've been talking to are saying that it feels like something is going to break by the end of the year. We are seeing a downturn in the stock market. The Dow is down about 2,000 points from its peak back in August. Your perspective on this, and I know we're also seeing across the world in China, we're seeing an economic slowdown there. So what do you think is happening right now?
Right. Well, first off, I think something already has broken. It's pretty clear that the numbers that they've been giving us have been bogus numbers. I mean, look at, just for example, today, the consumer, I think I read it was a 9 sigma event miss. The consumer has collapsed. Real estate is collapsing. We're already in a recession. There's no doubt in my mind that we're already in a recession. This thing is going to turn into a depression. Interest rates have spiked dramatically. And as I've talked about for many years, the world runs on credit. And I mean, rates on the 10-year have gone from, over 2 years' time, gone from 0.6 of 1% all the way up to 4.6. So, I mean, that is a 4 percentage points is a giant move, but off of a base of 0.6, it's a tsunami. And that's, I mean, you can see that clearly. I think the pending home sales is now at all-time lows since they've been tracking it. And that was just announced today or yesterday or the day before. So it's pretty clear that the economy has already or is already rolling over drastically. You mentioned China. China is a huge debt monster also. Their real estate market has been weak and, if you want to call it, imploding now for a year. I mean, China is over 300% debt to GDP. We have reached, on a global basis, debt saturation. And what debt saturation means is basically Uh, there is not the ability to take on more credit, nor is there the appetite to take on more credit. And because this whole system is set up as a Ponzi scheme, the only way to get new capital into the system to pay off old investors, as in a Ponzi scheme, is to create more debt. They cannot, I mean, we're at debt saturation. There's no way that debt can grow exponentially from here. If you look at, in the US, look at M2 money supply. That's down 5% year over year. That's never, ever happened except, I think, during, what was it, 1930 or 31? It was during the Depression. So you've got money supply collapsing. You have interest rates spiking. We also may be seeing velocity turning up. It does look like velocity has started to turn up. And what that tells me, not so much on a local internal to the US basis, but on an external basis, it tells me that foreigners are dumping dollars. Even though you're seeing the dollar index rise versus foreign currencies, you are seeing debt holdings of some of the big majors like Japan and China. Those have been collapsing. And I think foreigners are looking at the dollar, thus debt, treasury debt. They're looking at it as a hot potato and dumping U.S. treasuries. So, I mean, we're right on the cusp of a huge credit problem. And finally, you're starting to see, as you mentioned, the stock market's down a couple thousand points. This, to me, is so reminiscent of what you saw all the way back to 1987. It's very reminiscent of what you saw going into the dot-com bubble. It's very reminiscent of what you saw going into the great financial crisis, 2008, 2009. You're seeing interest rates spike, only this time the spike is higher than the previous high. That's the first time that's happened since 1982, where interest rates actually took out the highs of the previous high. So to me, this looks like it's the last hurrah, and it's a systemic event.
It seems like it is a systemic event. You mentioned how interest rates are rising higher than they did before, and this is the first time that's ever happened. And it doesn't seem like the Fed has they're not going to be slowing down anytime soon. They have paused this last week or so, but it looks like they're still talking hawkish, and more rate hikes are to come. Your perspective on that?
Yeah, it doesn't matter whether they pause or even if they turn and started to lower rates, because I surmised a year ago that once rates got through 3.25%, things would start to break. And sure enough, this spring, when we got to and through 3.25 on the 10-year Treasury, what happened? You had four very large banks go belly up. And those four banks, if you add their assets together, those assets were more than all of the banks combined back in 2008, 2009. So it's already a huge event. Things are already breaking behind the scenes. And you mentioned that the Fed just paused. To me, it looks like they're doing this on purpose. I mean, I wrote this back in 2007, that the policies that they were putting in place were too stupid to be a mistake. It had to be a plan. And I stick by that to where we are today. I think it's a plan. I think they're going to try to tank the entire system, and it will be, let me just back up a little bit. They know that the system is untenable. They know that the math does not work. So they know that a crisis is coming. Obviously, they don't ever want to let a good crisis go to waste, so to speak. They're guiding this into a complete collapse because they want to force the public to beg for a CBDC. If they came out and said, we're doing a central bank digital currency, as things are right now, people would complain about it. But if people have lost all their savings and are basically penniless, they're going to beg governments all over the world, please give us money. And it doesn't matter if it's a central bank digital currency. They're going to snap the trap shut is what they're doing.
And that goes back to the whole meaning of liberty in finance, right? Is we don't want to be in that situation where we have to beg the government to save us, because every time that happens, it just takes away liberty. And it's the irony of central bank digital currency is that cryptocurrency was created to be decentralized, limited in supply, and not controlled by governments, right? But that's the central bank digital currency is exactly the opposite of what, other cryptocurrencies have claimed to be.
Well, it's the opposite from a liberty standpoint from your rights, because you can have your account shut off. I mean, you and I, if we had a CBDC account and we did this interview with what we're talking about now, that's it. They shut us off. We're penniless. Good luck eating. So it is the same in that, or I'm sorry, it's the opposite in that respect from a liberty standpoint, but it is this CBDC and if you want to call it private crypto, the individual like Bitcoin, Ethereum, etc. It's exactly the same. It's digital air. It's nothing. It's fiat.
It is nothing, as you mentioned. It's no different than what we have now. It just is. It can be controlled more, and like you mentioned, they could shut off your account. I did want to ask more about the stages that we're seeing, the movements we're seeing towards this collapse. You've said that hyperinflation is inevitable. We are seeing increased oil prices, which definitely have an impact on inflation. So as we're seeing the Fed raise interest rates, trying to take control of inflation, it just seems like things are getting worse down the line.
Yeah, I've been told many times that whenever I've said that the end game, we will see hyperinflation of the things you need and hyperdeflation of the things you have. I've been told, 1,000 times, you're an idiot. It can't happen. You can't have inflation and deflation at the same time. But we have that already. I mean, just go to the grocery store. Look at healthcare costs. Look at oil. The things that you need to survive are inflating. There's no question about it. And the things that you have, real estate, stocks. And when I say stocks, don't look at the averages, because they're able to hold, or they've been able to hold the averages up by manipulating a dozen or 15, 20 different stocks to keep the averages up. But if you look at the average stock, I mean, they're hammered. They're down 30, 40, 50% inside, in the broad picture. So, I mean, we're seeing deflation of the things we have. And just look at the credit markets. Look at bonds. Bonds, U.S. Treasuries, are the foundation to the entire system. Yet, with interest rates going up, you've got huge losses. I think I just read an article, the Fed has lost over 100 billion. Bank of America, their book is down over 100 billion. And it's interesting. They did merge the Fed and the Treasury a year ago or 2 years ago. So now the Fed can rely on the balance sheet of the Treasury, which is even worse. But if you ask somebody, is the government broke? 95% of people will tell you, yeah, the government's broke, but it doesn't matter. My point being, they merged the Fed into the Treasury basically to hide the Fed's balance sheet. And if you go back, I think the last time I saw was maybe 3 years ago or 4 years ago, the Fed is running this whole operation. The last number I saw was on $65 billion is holding up the system, if you will. So you're seeing huge deflation in the credit markets. And I mean, those are the three asset classes, if you will: bonds, stocks, real estate. They're deflating. At the same time, it costs you way more each month, each year to live, to survive with the things that you need.
Now we have some viewers' questions, and on this kind of same line of thinking of where we're headed, Paul is wanting to know, you have talked about a complete breakdown of our debt-based financial system occurring in the very near future. Where do you see this country a year from now, both economically as well as socially?
Well, you put a time frame on it, so not sure I can answer it correctly in a 1 year time frame. I certainly think we're going to have the breakdown within the year. how long is it going to be broken down? Is it going to be 2 months, 2 years, a generation? I don't know. But at some point in time, we are going to go through, I believe, a Mad Max scenario where, because credit has broken down and the payment systems will break down. Do you really believe that the police are going to be working? Do you really believe any first responders will be working? Our social security checks or the aid checks, the EBT cards, are those going to work? No. Grocery stores will be empty. When I say grocery stores will be empty, in order to create the goods that end up on grocery store shelves, you have to have credit. So when credit breaks down, it's going to be a shit show, plain and simple.
And this viewer is wanting to know, what are some of the signs we should be looking for? Obviously, we've gone over this just a few minutes ago. We're seeing the collapse in slow motion right now in your view, but what are some more signs that you'd be looking for?
You could look at what's happened in China with their big property markets, Evergrande, then the next one, which was even bigger. Look at San Francisco. Look at I think there was a hotel that sold for $245 million back in 2018. It's now on the market for $90 million, and they're asking $90 million. Are they going to get 90? No, they'll probably get 70. Who knows what the number is? But my point being, that's a loss of close to $200 million. So who's going to eat that loss? And I'm asking that as a question system-wide. It's a loss. It doesn't just go away. It's not like all of a sudden, $200 million, it gets thrown away. Somebody eats that loss. And that's on a system-wide basis. That is not, it's not just San Francisco. Like I mentioned earlier, the pending home sales have collapsed. It's a classic debt bubble that is beginning to deflate. So, that's what you look at. You watch the credit markets, watch interest rates, watch the foreclosures that are coming up. It's over.
Right. And I think it's interesting to note how interconnected the system is, because it's not just like, people who own real estate will be hurt. Well, no, if the commercial real estate sector, it's already taken a hit. It looks like you're mentioning the hotel sector in San Francisco. But if these properties lose so much value, that also impacts banks, and then that can impact, the person who may not even own real estate. So can you expand on that, how it's all kind of tied together right now?
Right. As I mentioned, somebody's got to eat the loss. And you mentioned banks. Banks forwarded the money. Some of the monies were packaged into CMOs. Those are going to lose. But what about the guy who owns a local diner? What about the periphery businesses that have run and been profitable in the past because of the new construction? New construction is going to stop. So now you're talking about construction companies getting hurt. It's going to hurt entire communities all the way down to, I guess you could say all the way down to the garbage collector, because there will be less garbage.
That's a very good point there. And mentioning communities, I think that is something right now that we really have to focus on. You've mentioned in a previous interview that your neighbors today, we don't even know them, right? For most people, we don't know our neighbors. And that's so important, because that has been a shift over the last few decades, where we used to know our neighbors, but now we don't. So if this collapse does occur, we're in a worse shape if we really don't make those connections now.
Right. And the reason I originally brought that up is because society is so different today. People don't know their neighbors. You go back to the Great Depression, there was a community thought. It wasn't about oneself. It was about the community. And in the Great Depression, you did have, neighbors helping the neighbors who were having hard times. In today's world, if a neighbor has a hard time, you got nothing but vultures all around you. You're going to get picked clean. You're not going to be helped. You're going to be harmed. And I've said this many times that I can't fathom, I don't understand the thought process of somebody who's living in a city or a highly densely populated area who believes they're going to be able to survive this. I don't believe it's going to be survivable within a city because you have no idea who your friends are, who your enemies are, and it's going to be a dog eat dog. It's going to be a dog eat dog world everywhere. But in a densely populated area, you don't have a chance. Now, if you're rural and you know your neighbors, you got a neighbor that farms vegetables. You have another neighbor that does livestock. People in rural areas have more of the same liberty mindset. Go forward and rely on yourself, rely on friends, rely on close contacts. I think that's the only way to survive this, is to be out and away from major populations, because I think the major populations they're going to be culled. And I do want to mention, they've talked about depopulating the earth. They want to get the 7 or 8 billion people down to 500 million. And you can look at it and you can laugh, but I don't think you should laugh. I think you should take them at their word that is the goal, is to depopulate the planet somewhat, on a huge basis. I don't think they're lying. I do believe that is the plan.
Can you share about, I know we've done this on previous interviews, but can you share about the preparations that you've made? I know you live in a very rural area, and I'm assuming you're building that community where you are. Can you share kind of some insights for our viewers in that respect?
Yeah, I mean, you basically, first thing you want to do is you want to get your assets out of the system. You don't want to have stocks with a broker, money with a bank, rely on an insurance company to make monthly payments to you. You need to get third-party risk out of your life and become your own central bank. You do want to live rural, and unfortunately, living rural, that skill set is very hard to find today. I mean, 100 years ago, 150 years ago, people lived out in the middle of nowhere and figured out how to survive. Those skills are gone. The average person today, if grocery stores were closed for 3 days, they're not going to eat again. So you do want to live rural, and you want to become as self-sufficient as you possibly can. And self-sufficiency means you need some form or forms of energy. You need tools. You need to be able to protect your place. You need food supply. You need water, and you need the ability to purify that water. I don't know. I guess for lack of better words, try to emulate Grizzly Adams as best you can, because it very well may get to that where there's no services at all and you're entirely on your own. Could you live entirely on your own for a couple weeks, a couple months, 6 months, a year, 2 years? I mean, who knows how long it's going to last? But that's what's going to happen, is at some point in time, you're going to be on your own. And if you're on your own rural and you have neighbors that you can barter with, transact with, that's going to make your life easier. But if you're in a city, everyone has nothing. So there's nothing to really trade back and forth. And the ones who do have something, they're going to be overrun and that'll be taken. So, just try to become as self-sufficient as you possibly can.
We have a viewer's question here. He asks, your assessment of the threat of debanking precious metal dealers. And I think this gets back to the point of how right now there's definitely a lull in demand for precious metals on the retail side, and premiums are lower. Supply is much better. And it doesn't take debanking for that to change. It, back in the March, April timeframe, we saw the most demand at Miles Franklin we've ever seen before. It was 4 weeks until anything could ship. So your perspective on that, kind of maybe getting precious metals now and not waiting necessarily for the future.
Right. The the time to buy insurance is when you can buy it. I mean, if you lived in New Orleans and Hurricane Katrina all of a sudden popped up on the map, you couldn't get insurance any longer. So your ability to protect yourself was gone. So you want to step up. I mean, if you've got funds that you want to protect, just protect it. Don't try to time it. I mean, timing it now is stupid because there's only a few seconds left on the clock. As far as debanking goes, I have kind of been surprised that hadn't been done already the way they tried to do with gun dealers. What's going to happen at that point? If dealers get debanked, then what does gold and silver in your hand become worth? It becomes worth more because the population can't get any, and the owners of metal will become whatever supply there's going to be.
We are seeing that, for example, I mean, in the UK, we saw Nigel Farage and his family, it seemed like, allegedly being blacklisted from a lot of banks. So banks can do that, and they have done that in the past if they don't like an industry or certain people, essentially just debank them, right?
Yeah, and one other aspect to this, we're talking about retail supply, and that's retail is I mean, you'd have to have a full-on onslaught for retail to clean out all the gold. You only need one or two big orders institutionally to clean up every ounce on the planet, because you're talking about so many dollars, so many yen, so many yuan, euros, etc. On an institutional basis. I mean, you get an institution that wants to move 100 billion, forget 100 billion. $10 or $20 billion would clean up all the gold and all the silver available from an institutional standpoint. And we're not talking billions anymore. In today's world, we're talking trillions. And in the derivatives world, you're talking quadrillions. So what I'm getting at is the institutional supply is so small that all it's going to take is one large institution to panic and say, I'm out of here. I'm buying gold. I'm buying silver. I'm digging a hole and I'm going to pull a rock over it and I'll look out when the smoke clears. You get one or two institutions that do that and it's completely over. And there will be zero metal available on both retail and institutional markets.
I know we have seen that, I mean, back a few months ago with the US minted product, which is your favorite, for example, with the junk silver, the premiums just going incredibly high. Now they've come back down, but it shows that the availability of certain products or any product at all can change dramatically on the retail side. And it's really a different market than, the COMEX or just what you look at the spot price as. Yeah, and I mean the retail market, you could completely annihilate and cripple the entire retail sector across the country for $500 million. $500 million would clean up. Let me be generous. $1 billion. $1 billion would clean up every single ounce of gold, every single ounce of silver. There'd be nothing available, and premiums would be 100% over spot, and spot would be meaningless. And that's where we're headed. $1 billion. And then you look at just the base money supply being, 8-9 trillion. That kind of puts things really in perspective there.
Right. Exactly.
All right. Well, Bill Holter, we really appreciate your time today. Before I let you go, what last thoughts did you have for our viewers, and where can our viewers follow your work if they're interested in learning more?
I would just again stress, become as self-sufficient as you possibly can. Don't try to time anything, because you could go to sleep tonight and wake up tomorrow and it's a completely different world, and a world that you have no ability to navigate. Just do the best you can and do it as fast as you can. You can read my work at www.billholter.com. There is a contact button on the website. If you want to reach me directly through my business email, it's bholter@hotmail.com.
Fantastic. Bill, thank you so much for your time as always, and God bless.
Thank you, Elijah.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.